Why are you still waiting? Let me hit you with something brutal right now. Every single day you delay buying even a fraction of Bitcoin, the math says you are leaving real money on the table. Not hypothetical money, not some fantasy. Real, documented, data-backed dollars. Today I am going to show you exactly how much waiting has already cost people, and why 2026 is the year that hesitation becomes a financial crime against yourself. Let me ask you something honest. How many times have you said, "I'll get into Bitcoin when things calm down"? How many times have you told yourself, "Let me just wait for the dip"? Or maybe your version is, "It feels too risky right now." Sound familiar? Because I hear this every single week from people who are working hard, grinding every day, and still watching their savings lose purchasing power while they wait for a safer moment that never comes. Here is the brutal truth that nobody in your circle is going to tell you. Waiting is a financial decision. Doing nothing is a choice, and that choice has a price tag attached to it. Not a small price tag either. We are talking about a documented, measurable cost that is now hitting the $10,000 mark and beyond for the average person who has been sitting on the sidelines. In 2026, Bitcoin is trading at levels that would have seemed impossible to the skeptics of just a few years ago. According to current market data in early 2026, Bitcoin has crossed and held above the $95,000 range, with institutional accumulation at record highs following the explosive post-halving cycle. The total crypto market cap has exceeded $3.8 trillion. These are not rumors. This is market reality. And the people who waited? They are now paying a premium to own the same asset they could have accessed at a fraction of the cost. So today, we are going to break down why waiting costs you, how the math actually works against you, what psychological traps are keeping you frozen, and I am going to give you 3 actionable moves you can make right now, regardless of your budget. Stay with me, because this is the wake-up call most people never get. Let's talk numbers, because numbers do not lie, and they do not care about your feelings. Imagine 2 people. Call them Alex and Jordan. Back in early 2023, both of them were looking at Bitcoin around the $25,000 range. Alex decided the market was too uncertain and waited. Jordan took a disciplined approach and put in $1,000, not betting the house, just $1,000 using a systematic method. Fast forward to early 2026, with Bitcoin above $95,000. That $1,000 Jordan invested turned into roughly $3,800. Alex's $1,000 is still sitting in a savings account earning maybe 4% interest if they were lucky, so about $1,120 in 3 years. The gap? Nearly $2,700 on just $1,000. Now scale that up. If Alex had invested $3,000, which is not outrageous for 3 years of disciplined savings, the opportunity cost of waiting exceeds $10,000. That is not speculation. That is documented historical performance data. Why does this matter? Because the cost of waiting compounds just like wealth does. But instead of compounding in your favor, hesitation compounds against you. And here's the pattern interrupt most people miss. People obsess over the risk of buying Bitcoin, but almost nobody calculates the risk of not buying it. That asymmetry in thinking is exactly why most people stay poor, while a smaller group quietly builds generational wealth. The question is not, is Bitcoin risky? The real question is, compared to what? Compared to cash losing 3 to 5% of its purchasing power every year? Compared to bonds that barely keep pace with inflation? The risk calculation looks very different when you measure it honestly. Now let's get into something deeper, because the math alone is not enough. If numbers fixed behavior, everyone would be wealthy. The real enemy is not the market. The real enemy is inside your head. There is a documented psychological phenomenon called loss aversion. Nobel Prize-winning research shows that the pain of losing $100 feels roughly twice as powerful as the pleasure of gaining $100. Your brain is literally wired to fear loss more than it values gain. And the financial media exploits this every single day. Every time Bitcoin drops 10 or 15% in a correction, which it does, it always has, and it will again, the headlines scream catastrophe. Bitcoin crashes. Crypto winter returns. Experts warn of collapse. And your brain, wired for survival, hears that noise and says, "See? I told you it was dangerous. Keep waiting." But why do those same outlets never run the headline, "Your savings account lost 4% of real value this year due to inflation"? Why is that not breaking news? Because fear sells. Fear keeps you clicking. Fear keeps you paralyzed. And paralyzed people do not build wealth. Here's another trap: the perfect entry illusion. People wait for Bitcoin to drop to a specific price before they buy. But the research on market timing is absolutely clear. Even professional fund managers with billion-dollar resources cannot consistently time the market. What makes you think you and I are going to outsmart the entire global market by waiting for the perfect dip? The wise money approach is not about timing the market. It is about time in the market, using a disciplined, systematic strategy that removes emotion from the equation entirely. Which brings me to your first actionable tip. All right, no more theory. Let's talk about what you actually do. Actionable tip number 1. Start a dollar cost averaging plan today. Not next week, today. Dollar cost averaging, or DCA, means you buy a fixed dollar amount of Bitcoin on a regular schedule regardless of price. $20 a week, $50 a week, whatever your budget allows. You do not look at the price. You do not wait for a dip. You just buy consistently. Why? Does this work? Because when the price is high, your fixed amount buys less Bitcoin. When the price drops, your fixed amount buys more. Over time, your average cost per Bitcoin smooths out, and you eliminate the emotional roller coaster of trying to time every move. Major regulated exchanges in 2026, including Coinbase, Kraken, and Swan Bitcoin, all offer automated DCA features. Set it, automate it. Forget the noise. Actionable tip number 2. Allocate only what you can afford to forget for 3 to 5 years. This is critical, and I will say it plainly. Do not put rent money into Bitcoin. Do not touch your emergency fund. Wise money means you build your financial foundation first. 3 to 6 months of expenses in a liquid account. And then you allocate a disciplined percentage of your discretionary investing capital into Bitcoin. For most beginners, 5 to 15% of your investment portfolio is a rational, defensible position, not your entire net worth. A. Calculated, strategic allocation. Actionable tip number 3. Own your keys or understand the risk you are taking. Here is something most beginner guides skip over. When you buy Bitcoin on an exchange, you do not technically own Bitcoin. You own an IOU from that exchange. The phrase in the Bitcoin world is, not your keys, not your coins. In 2026, with hardware wallets like Ledger and Trezor more accessible than ever, there is no excuse for not learning the basics of self-custody. Start small. Practice with a small amount. Learn the process before moving larger holdings off exchange. This single step separates serious Bitcoin holders from people who get wiped out when an exchange fails or gets hacked. Now I need to slow down and give you something critical, because this playlist exists not just to educate you on opportunity, but to protect you from predators. Fraud alert. As Bitcoin's price has climbed in 2026, so has the sophistication of Bitcoin-related scams. Here are the 3 you must know right now. Scam 1. Fake Bitcoin ETF investment platforms. Since the SEC approved several Bitcoin ETF products starting in 2024, scammers have built convincing fake platforms mimicking these legitimate products. They show you fake dashboards with growing balances, let you withdraw small amounts to build trust, then disappear when you deposit your real capital. Rule: only buy Bitcoin ETFs through verified, licensed brokerage accounts like Fidelity, Charles Schwab, or Vanguard. Never through a link sent to you via social media or text message. Scam 2. AI-generated celebrity endorsements. In 2026, deepfake technology has made it trivially simple to create convincing video clips of famous investors and celebrities appearing to endorse specific crypto projects. If you see a video of any celebrity telling you to send Bitcoin to an address to receive double back, that is a scam. 100%, every single time, no exceptions. Scam 3. Bitcoin recovery services. If you have lost Bitcoin to a scam or forgotten a wallet password, predators specifically target you with fake recovery services that charge upfront fees and deliver nothing. Legitimate blockchain forensics firms exist, but they do not find you on Instagram. Do your research through regulated, verifiable channels only. Remember this: legitimate Bitcoin investment does not require urgency, secrecy, or sending your coins to a stranger. If it feels like pressure, it is a trap. So here is your assignment right now. Drop in the comments, why have you been waiting? Tell me your real reason. Price too high? Too confusing? Too scared? I read every single comment and your answer might become the next video. If this opened your eyes, hit subscribe, because at Future Freedom 360, we drop wise money truth every week that your bank definitely does not want you hearing. Next video: why your bank is terrified of Bitcoin in 2026. You will not want to miss it.